What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today's episode is going to be your special weekend update, and we're going to take a look at the S&P 500 SPX index. Today, I want to talk about where the stock market could be heading and where we will likely start to see a stock market correction. It's very important to understand that I'm not trying to call a market top here. I just want to take a look at the market from a weekly perspective and try to see where we're going and where we're likely to see a resistance level that could lead to a correction. So let's go ahead and crack open this chart and see what's going on in the stock market today. Okay, so the first thing to know is how I got these levels is in another video I actually did on November 15th, and you can click up above if you want to see that video on how I got these levels. Back then, I said the stock market would likely melt up and go up about 12% when a lot of people were still very bearish on this market, and now we're very close to hitting these critical levels that I predicted back in November of 2020. So the first thing we want to look at in this chart is the price action. Keep in mind this is a weekly chart, so every single candlestick represents one entire week of price action. So we see with last week's price action, we continue to see bullish price action because we're still closing over the 5 EMA on the weekly chart. Also, it's important to understand the trend of the market. The trend is still extremely bullish because all of these moving averages are still positively sloping and trending to the bullish direction. We also see evidence that the bullish trend is picking up momentum and strength because the 5 EMA is creating separation from the 13 EMA, and the 13 EMA is creating separation from the 20 EMA. Likewise, you can see the 20 creating separation from the 50. So as moving averages start to expand and separate while trending upward, that's proof that the bull market is gaining traction and gaining momentum, and it's only strengthening. That's why I always say right here on the Stocks channel, do not try to call a market top, and do not try to short the market just because you think it's reaching a top. So it's very important to understand the purpose of this video is to not call a market top and try to force you to become bearish because we're reaching higher prices. I'm very objective and I follow the price action and the trend, and I don't want to try to say that the market top is in until we see the price action and the trend tell us that we've likely hit a top and it's ready to start correcting. So some things to note on the SPX index is there is a very important level that we need to keep an eye on up here at 4040. The SPX closed right around 38.24 last week. So from last week's close to this resistance level up here, there is still about 5.5% upside. However, like I talked about in Friday's video, it is very possible that we see a blow off top scenario where the market just starts melting up from here and we go up way too far, way too fast, which actually can trigger a stock market correction. So the number one thing I want you to watch on the S&P 500 is watch for this critical level at 4040. If we get up to that level and we start finding resistance and we start to see the market selling off, that could have been a temporary top that's going to trigger a stock market correction. However, if we do blast right through that level, it will tell us that we're likely going to continue to head higher in this bull market. And even though we could see a little bit of pulling back and selling from that level, it doesn't necessarily mean that we're going into a correction. Remember, it's completely normal to see some selling in bull markets. Corrections are healthy and they're completely normal and they are to be expected. As you can tell from all of these candlesticks, we did have to get through some volatility back in October and September before the market could continue to head higher. So when I say a stock market correction, I'm talking about something more like what we saw in September and October. As you can tell from the weekly chart, there was about 3 red candles in a row on both occasions. That is more indicative of a stock market correction. When you're looking at a bull trend coming out of a stock market correction, it's very possible you'll see 1 week of selling. That's strictly just normal price action and cooling off because the stock market just can't go up in a straight line forever. So when I say that the price level at 4040 could trigger a stock market correction, I'm referring more to a 3 or 4 week period of volatility and downward trending. So in those scenarios, you don't want to be too bullish and you don't want to have 100% of your cash in leverage positions where you're extremely susceptible to downward movement in the market. So the number one thing I want you to be cautious about is the higher the market goes, I want you to be taking less risk in the market. We have been very bullish on the Stocks channel for many months now, and it's very important that you don't remain extremely bullish the higher the market goes. I'm not trying to scare you and tell you to sell everything, but just be cautious that you're not opening weekly call options or getting into a bunch of 3x leverage ETFs as we reach market highs. Being disciplined in managing your cash positions is the number one way to survive stock market volatility and corrections. The more cash you have and the more disciplined you are in trading your positions and locking in profits, the more likely you will survive volatility and corrections in the market. And you might actually even come out of a correction with a lot more money than you went into the correction with, because that volatility is also buying opportunities where you could get great stocks for discount. So remember, there's about 5.5% on the upside on the S&P 500 before we could start finding significant resistance. And with a blow off top scenario likely coming, we could get there very quickly. So I'm sounding a warning sign to just pay attention to the market and don't get overly bullish and don't be chasing stocks that have gone parabolic when we're near a market correction. It's very possible that a correction is right around the corner at these levels. It's also very possible that we get up to this price target and pull all the way back to the 20 simple moving average on this weekly chart, which would be a correction of about 10 to 15%. So you can see that there will be significant potential downside once we hit these levels. Again, everything I'm saying is not to scare you, it's just to prepare you. So the next thing I want to do is I want to take a look at the NDX, which is the NASDAQ 100 index. And I want to also show you that the NASDAQ 100 has a lot more upside to go as well. So from last week's close on the NDX to my price target up here, there's still about 10.4% upside before we find resistance. Now that does seem about right because typically speaking, the NASDAQ outperforms the S&P 500. So if the S&P 500 has about 5.5% upside, it doesn't surprise me to see that the NASDAQ 100 still has about 10% upside. Remember, the NASDAQ 100 has those huge market movers in it like Amazon, Microsoft, and Apple, which could really move the market if they start moving as well. So just like I showed you with the S&P 500, we are getting very close to a very critical point in the market where we could get into a correction once we hit these levels. So with a blow off top scenario likely coming, we could hit these levels very quickly because the market could start melting up and there could be a lot of short squeezes that drive the market way too high, way too fast, and that usually triggers a correction. So on the NASDAQ 100, if we did get to that level and we did correct all the way back to the 20 simple moving average, that's a pullback of about 17%. So again, not trying to scare you, just trying to prepare you for what's likely to come if we do get a stock market correction. As I always tell my Discord members, be prepared for the worst possible scenario and you will never be disappointed in this market. It's okay to keep trading long as we head higher, but be in a position that if the market does go into a correction, that you're not caught with your pants down and you don't lose all of your money in 1 week of volatility. It's very important to reduce how much you're leveraging your accounts at these points in time and just be disciplined. If you're looking for a trading community that's disciplined and focuses on profits, consider joining the Stocks Channel Discord community because we're absolutely crushing this market. You can find out how to join the Discord server by clicking on the link in the description of this video. So last year in the year 2020, my price target on the NDX was right around 12,770. And as you can tell from this chart, we're now trading above that level. So there's still upside in this market. And like I said, I'm not becoming bearish just for the sake of becoming bearish. I'm strictly trying to sound a warning sign for all of you that just needed to hear this message. The market is likely going to continue higher, and we can see the price action on the NDX is trading above the 5 EMA, and the bullish momentum and the bullish trend are still very strong. So there's no way you can look at this chart and be bearish because the price action and the trend are extremely bullish. So I hope that's clear for all of you, and I hope this video really helped you in some way or another. If you appreciated this message, please let me know by smashing that like button. I do these special updates on the weekend from time to time, so if you appreciate them and like seeing them, just let me know down in the comments so I know if it's worth my time. Remember, if you're looking for a community that's nailing this market and being disciplined and profitable, consider checking out the Stocks Channel Discord. Click in the link in the description of this video to find out how you can join. I hope you all enjoy the remainder of your weekends, and as always, I will see you in the next episode.